So, ladies and gentlemen, my name is Michael Caselli, and I will be moderating today's panel of esteemed guests. You've come here to talk about financing iGaming businesses. And in iGaming, there certainly are such a thing as a slow news week. This is not one of them. Just this week, we've had PASPA repealed in the United States, declared unconstitutional, and just this morning, we've had a major blow to the high street bookmaker, with fob tees being limited in bets down to £2, whereas before they were taking bets up to £100. So we're going to talk about that too, because, well, what the hell, we're all here and might as well. This is the big news of the day. So I think what we're going to do is start with the two news items for the day before getting into our bigger questions in financing.
Maybe introduce the panel?
I'm going to do that right now.
Okay, good.
Absolutely.
Yeah.
So here on my panel to the far left, we have Mr. Adam Perkins from BlockX. To his right, Mr. Simon Collins from Gaming Realms. To my right, Mr. David Schollenberger, of course, our host, partner, and head of gaming hotels and leisure here at Healy's. To his right, we have Rob Heller, who's the co-founder and CEO at Spectrum Gaming Capital. And to his right, oh, you were supposed to be Mr. Burnett, didn't you? Weren't you? We have Mr. Simon Oten instead of Mr. Burnett, who I originally had, which is great because he is a perennial expert for our panel. And yeah, Mr. Simon Oten. So, ladies and gentlemen, with that, let's start with our news items of the day. To my panel. So, like we mentioned, the FOBTs are going to be limited to stakes of only £2, whereas before they were much higher at 50 times that number. Simon, let me ask you first, Mr. Oten, not Mr. Collins. What effect is this going to have? Because there's been a lot of press leading up to this, where the bookies are saying this is going to shut down half the shops, we're going to have thousands of people unemployed, and this is going to be terrible for the UK economy, and it's just a nanny state mothering the population where it doesn't need to be mothered. What is your opinion on the economic outcome of this decision?
Well, clearly FOBTs generate a significant amount of revenue for retail bookmakers, so it will have an impact on retail bookmaking from a scale perspective. Whether it's going to have a significant detrimental effect on the UK economy, I think as the UK economy as a whole, the answer to that question in the round is probably no, within the context of the scale of the UK economy, but it will have an impact on the tax revenue generated from gaming, and that's why one of the reasons the debate that has been relatively well reported over the last few months between Treasury and DCMS, the interplay between remote gaming duty, which was also announced as going to increase, and so within this audience will have a greater impact than the FOBT stake change itself. What it increases to is unknown yet, but it's currently obviously at 15%, so whether that increases to 20% or 25%, I've certainly seen scenarios with both of those outcomes modelled, and that will really have a further impact on gaming and online gaming, and there are other amendments and suggested proposed changes embedded in the announcement this morning with regards to online gaming and limitations on staking prior to the completion of further KYC. So I think it's a package of changes that will have an impact on both retail and online gaming in the UK. But as is always the case when gaming legislation changes, it's followed by innovation in product, and there will be greater innovation in product in the retail environment, I think, as a result of this, as bookmakers seek to respond to it. But this isn't a surprise this morning. I think this is something that's been anticipated at this level for some time.
Do you feel that this will result in the closure of high street bookies?
I'm sure some high street bookmakers will close. How many, I think, is more debatable.
Okay, so you don't think the scale is anything near what was originally reported, where some of the bookmakers were saying this will result in hundreds of shops being closed?
Well, there are 9,000 bookmakers stores in the UK, there have been somewhere between 8.5 and 9,000 bookmakers in the UK for a long time. Those have consolidated into the three main bookmakers, with a reducing pool of independent bookmakers over the last decade, and there will be some opportunity for efficiency and a requirement for the revenue reduction to be matched with some form of cost reduction, and store closure will form part of that solution. That I'm sure of that, but how many, I think, depends on where the product comes out. Bookmakers still make a good return on investment on a store-by-store basis, but FOBTs are a fundamental part of that, and that's going to change.
And David, we mentioned potential limitations in online gaming stakes. What are we looking for the likelihood of that to happen, and what timescales are we looking at?
For online gaming.
For limitation on stakes in online casino games or betting.
Yeah, I'm going to have to pass on that, I'm afraid. That isn't something that I've been following. Yeah.
Okay, fair enough. But I mean, on the horizon, I mean, it does make logical sense that if the argument is that you shouldn't be allowed to bet at a FOBT without anyone watching you and making sure that you're not doing the wrong things, then I suppose that the same logic might occur for the online gaming space. But
I think the argument of the online space will be that you are monitored. There's a capability of monitoring you much closer by the amount of time you're playing, and I think the online paper trail gives a much more precise view of the user than a bookmaker has, and surveillance systems have not really been designed to focus on problem gambling in the past, whereas I think it's much the systems that are in place for online gambling are able to control that better.
Does anyone on the panel think that, and that's a logical and coherent and intelligent argument, but will the newspaper understand that argument? Will Parliament understand that argument? Do you think that that's something that we're going to be able to get across effectively enough so that the population says, oh, okay, we get that, we accept that, and therefore we shouldn't be limited in our stakes?
So I kind of think the £2 stake limit is a failure of the sort of business that we're in the sector to effectively engage with those sorts of people, the newspapers, the public, and government. And I think we're going to, I think we're even more at odds in the online sector. So I don't see any cohesiveness around the online sector to sort of put forward a consistent and coherent argument. So it's been said many times before, I think Steve Donahue's always going on about it, that we don't really lobby that effectively here in the UK. Yeah. And maybe that's part of the reason we bemoan our fate when it gets handed down to us. But hopefully we can try and put some efforts towards fixing that.
I would totally agree. I think gaming just generally is not very, very well lobbied pretty much anywhere. Besides perhaps the Indian gaming in America, there's not been a really effective, at least PR campaign that's positive for gaming. I think as part of this result of the limit in £2 stakes, there's going to be a national problem gaming campaign worth about £1 million put together by one of the gaming associations. But just talking about problem gambling isn't the same as putting forth the notion that actually there's some social good that comes from things like betting shops. In France, the betting shop is treated as a important social activity, and we just haven't communicated that same idea and that same culture, I think, effectively in the media. And we keep getting struck down every chance the media gets. And you're absolutely right, we do need to kind of be more cohesive and work together to actually change the opinion, not just of the public, but of the people writing these articles.
Well, I think that's part of the problem. So you've got the sort of the larger guys who do a bit of effort, and Betfair have reached out to me in the past about helping them with some letters and stuff like that. And when you're chatting to those sorts of lobbyists or guys who help on the regulatory side, they're surprised to hear about companies like Jackpot Joy PLC. They're surprised to hear about guys who are in the bingo sector or the slot sector. So I don't think, whilst the sports betting organisations, the big, huge organisations, are very effectively probably chatting to one another, I don't think it sort of percolates down to some of the smaller operators, especially those who come from more of an offshore sort of a viewpoint like Leo Vegas and some of
Right.
those sorts of Scandinavian-based organizations.
You're absolutely right. Now, there are more stakeholders that are going to be affected by the limit on FOB-Ts than just the bookies themselves. One would be the rights holders, especially in the rights holders of things like horse racing. Does anyone have an opinion as to what this means for horse racing, an industry that's traditionally been bolstered and favored by government and the population generally? I mean, people don't like to see race courses go out of business. As in the U.S. especially, you'll see that race courses are given a lot of special treatment so that they're kept open for, I guess, public entertainment, public good.
Yeah, I can only comment on this last topic, and that in the States, the racing business has been dying for years. The level of attendance at track events does not stop declining.
Right.
Simulcasting has made a huge difference, and has been the only thing that's enabled these tracks to stay alive. There's been a tremendous consolidation among the track ownership, so there's 2 or 3 companies that really have most of the tracks, and those companies have also gotten into the technology side to bolster their revenues, and one of them, Churchill Downs in particular, has gone into the casino business, and I think half of their revenues, or not, or more, now come from regular casino gaming, and we've also seen at the U.S. tracks what they've done. Remember, in the U.S. it's state by state, so it's kind of like looking at a country here, and that's a state there. It's over 300 million people in 50 states in the United States, and there's about, I guess there's about 40 states that have legalized gambling, and even more when you take into account tribal casinos. But as it relates to the tracks and fixed odds betting terminals, which we affectionately call slot machines, they've added, in many places, they've added slots to tracks. They call them racinos, and those have turned essentially have made a dramatic impact on those places, and those tracks now generate most of their profits from their slot machines. So you might see more of that sort of thing here, blending of the business. But the casino business there is very different than it is here. We don't have betting shops.
And this is a good segue into what we want to talk about next, which is PASPA. You mentioned Churchill Downs and its revenue coming from casino. I've worked with Churchill, sold businesses to them, and they're constantly looking for new revenue streams because of the Kentucky Derby can only sustain you for so long. Yesterday, Churchill Downs announced a partnership with SB Tech, if I'm not mistaken, clearly in response to the Supreme Court's decision on PASPA, and are now looking to get, obviously, into the sports betting business. My understanding is there's something like 5 or 6 states that have legislation written and ready for this decision. New Jersey, of course, is going to be one of the first to adopt. Pennsylvania, I think West Virginia, and a couple others. Tell me what you think, Rob, is going to happen in the U.S. Are we going to see pretty much every betting company trying to do a deal right now? And at what point will we realize, or will it become known as to what entities are going to get a license for sports betting? And if those entities are only going to get a license on premise, or if it's going to also extend to internet sports betting?
Yes,
so there's a lot of questions.
It's a lot of questions there, and there's an awful lot of attention being paid to sports betting and the opportunity in the U.S. because illegal gambling is about estimated by the American Gaming Association at $150 billion, and most people that I speak to who have their own estimates think that that's low. That's $200 billion, $250 billion. The economics of sports betting in the United States, where it really just exists in Nevada, although there's 4 states that allow it, that were excluded from PASPA, only 1 state actually has sports betting, and that is the state of Nevada. And there the metrics are that about 5% of sports betting turns into gaming revenues. Right? and then the margin will on that business is about 30 or 40% with a 10% tax rate, and with no fee to the leagues. So there's multiple things going on. Number one, which states are really going to do this? As you mentioned, 4 states have already passed legislation that immediately goes into effect once PASPA has been repealed. However, the details of that legislation have not been ferreted out that much. New Jersey will working quickly, but one of those states, they haven't even passed the tax rate. Mm-hmm. So so that's number one. Number two is it going to be just in the casino, or is it going to include remote betting? Now, if you recall, there was a lot of attention about iGaming coming to America. I guess it started maybe 7 or 8 years ago, when it was. Excuse me, I take that back. It started about 4 years ago, when New Jersey decided to permit it, and the expectations were huge, and that it was going to be in every state. And here we are now, 4 years later or 3 years later, and New Jersey is the only place that really has iGaming. Because in Nevada, where it's been legalized, it's only for poker, and the other state is Delaware, and there's a high tax rate. It's run by the government. There's no people there because you can't bet state to state, so it's meaningless. So here we are 4 years later, a massive investment in getting ready for it, and it doesn't exist. Why doesn't it exist? Because state legislatures, it's a conservative country in many ways, a religious country in many ways, and a lot of state legislatures don't want gambling in people's homes. So now we move it forward to sports betting. Sports betting is more commonly appreciated by the populace. Society has moved forward in terms of allowing this as a good activity, and several states, 4 states, as we said, have passed laws just based on PASPA, and there's 7 states that have proposed legislation. Many of them, but we don't know if it's going to be at the casinos and at the tracks, or just casinos and not the tracks. So the racing business, again, is very eager to get involved. But most importantly is, will it be digital? Because if I'm not mistaken, in the UK, once they had digital sports betting, the revenues doubled. And I know in Nevada, once they put in digital, even though it's not as good as it is here, because you still have to go to a casino to set up an account, the revenues doubled. But if you think about iGaming, and New Jersey is going to have digital, but New Jersey, remember, is the only state that already has iGaming. So if you think about the reaction towards having gaming in the house, and you can imagine that a state says, okay, we're going to allow digital sports betting, and now a photographer goes into somebody's house, in New Jersey, for example, where they'll do it, and they'll take a picture of mom and dad and the kids watching the Sunday football game, and everyone's gambling, including the kids. So the next state that looks at passing this is going to get that picture or the video maybe of it, and the Bible belting, the Bible thumping people, the anti-gamers, will say, no way, look what we want our children betting on sports. And I think, and I have.
You think they'd rather have them bet with the mafia as they do now?
Well, here's the interesting thing. It's not that many people who are betting with the mafia. I mean, it's 150 billion. Can you imagine how big it would be if you were betting legally?
Everyone's betting with the mafia in the U.S. I mean, it's not necessarily organized crime as it used to be, but I mean, there is a bookmaker on every corner in the U.S. I think that it is very common. I don't think it's as prevalent as you. You're an American. You sound like an American. I've been in the gaming business for 35 years. I don't think it's that prevalent in terms of people betting illegally. But maybe I'm wrong. Maybe it's because I don't bet on sports. But it's definitely because you don't bet on sports.
Okay.
Every barman in America will tell you which guy at the bar is going to take a bet. Usually, it's the barman.
So, but I think that's still the case. I mean, we don't let children in the United States at the drinking age is 21, it's a conservative country. So I think you're going to see some backlash. My point of view.
Do you think that the lotteries will want to get involved with sports betting?
Absolutely. So you
will
already
turn
have
every 7-Eleven into a sports betting outlet?
You already have, and I think that's a bigger and less discussed opportunity. is that is the lottery opportunity. And I've been talking to some of the lottery companies who want to come there and want our help trying to figure that out and where is the best opportunity. There's, as you get convergence in gaming between online casinos, horse racing, simulcasting, lotteries, it's gonna be a regulatory battle. Who gets it? Which government agency? Is it going to be the casino regulators that are going to get it for the casinos, or is it going to be the lottery regulators? So I think that is a big opportunity for the lotteries in certain places where the lotteries
Or a new
certain
regulator,
states.
possibly. I mean, in some countries they have a separate entity. Cyprus, for example, they have a national
Sports
betting authority, special, that's different from the casino authority. So it could be another regulatory agency.
Well, look,
that-
the trend generally is in business is towards consolidation to gain efficiencies. The trend in government theoretically should be the same, which is to consolidate it over time. So I think longer term, you'll see fewer regulatory bodies, within each state. But you can't stop the idea that people want power and control and control over jobs, and therefore you may see a third body. But I'm more likely to think it's going to be one or the other.
But unlikely to be a federally regulated area, and that's one of the big problems with the rollout is that it's going to be state by state. You aren't going to be able to cross borders because of the Wire Act still, and it's going to be the kind of critical mass is not going to be as big as it would be if there was a way to do it nationally. So,
Do you think that smaller population states are going to struggle to
make a go of it? Well, you can see with Nevada, they certainly haven't set the world on fire with their poker business, have they? So,
Well, poker requires pooling,
Yeah.
right? To make it interesting. Without the liquidity of that, you don't have much of a game. And the casinos there are the main driver for that state. They have a massive influence over what happens in that state, more so than any place else in the country. And they haven't wanted it really in the homes. They want people to come to their properties and play and stay and eat and go to the shows, whatever it is else you do there, shop. So I don't know if Nevada is the best example of that. I don't know if sports betting requires really as much pooling
It
as poker,
depends.
right?
I mean, it depends, right?
If we're in a
And
betting exchange, obviously,
Yeah.
it'd be much better to have
in exchange for
Yeah,
sure.
yeah.
But even odds disparities are going to be a problem. So if I'm in Delaware and I have a small state, and the Eagles are playing, but maybe at home, all of a sudden I've got an issue where my population is going to bet heavy on the Eagles. Now, if I'm a multi-state operator, I could absorb that because maybe they're playing Dallas and I've got operations in Texas and I can balance my sports book
Yep.
through that. If not, then I'm going to need to alter my odds to get more people to bet Dallas and Delaware if I'm only stuck within my state. Unless, of course, I could maybe lay off with other bookmakers. But I'm not sure in a world where the Wire Act exists that that's going to be a possibility. So can I call a bookmaker in Texas and say, you're heavy on Dallas right now, I'm heavy on the Eagles right now, can we lay off with each other? I don't know that that's going to, if that's going to be able to exist or not. Does anyone have an opinion on that?
But isn't that why Betfair are in a great position here? So I noticed that they're talking about buying FanDuel or investing in FanDuel.
Right.
But in addition, they've got an exchange-based product, which they don't care. They're just going to take money based on the exchange.
If
So
yeah.
they can go state by state, they can go
But
city
can you
by
pull
city.
the exchange? That's the next question.
But for them, it kind of doesn't matter because as long as you're running it in a whatever the regulatory situation is, I think they're going to be in a very strong position for the U.S. market. They've already got TVG, the advanced wagering stuff on the horse racing. So bring the exchange into that marketplace, and you kind of
And
don't
it
need
does-
to call the guy and
It doesn't matter.
yeah.
But then again, the odds disparity will then promote illegal betting because if you're in Delaware and I want to bet the Eagles and I can get a much better price with somebody in Texas, then I've got to go to my, well, it's going to be hard to find them if I live in your neighborhood, but anywhere else. I have to go to my local guy or maybe go
There's a
offshore.
good chance those guys will be straightening out the exchange as well, right? So they'll be in that exchange and part of the liquidity of that experience. And I'm sure the legal guys are looking forward to having legal options available to them.
Well, I
sort
think
of run
actually
their businesses.
you're touching on an interesting point, which I think is understated as people have looked at the potential for sports betting, and that is that it's a risk business.
Right.
You can lose, the companies are all looking at it and thinking of it in the terms of just another gaming business where they're locked in to win, but there's real risk in this business, and that's going to create a friction cost.
I guess unless there's liquidity, though. If there's enough people betting and you could balance both sides of your bet, you've always got your 5% margin.
I think that if you look at the more mature digital sports betting businesses, actually there's been a very, very dramatic drift away from ante-post, pre-event betting where you have this arbitrage problem, state to state, or the vast majority of the revenue and the margin is now made on in-play, entertainment-based, recreational betting product. Yeah, it's one of the reasons I think the digital argument is more difficult than the kind of the straightforward view of do you want it in the home, because you can't have in-play betting with the same type of engagement unless you can do it at an event you're watching or in front of a TV when you're watching. So the second screen is an important element for enabling that. Then you have a higher margin, you have less exposure to volatility, you have less challenge with regards to arbitration between different markets, and a less compelling product for an exchange in a way. And so one of the challenges that exchanges have had in getting past their kind of niche status in terms of the market into that much larger market is driven by that, the demand of that in-play, more entertainment-focused product. So I think, the sports betting margins in the US are ridiculously high at the moment. They'll come down, we'll get more in-play product. It will take longer than anyone wants to believe today for this all to happen, because it will happen state by state. And the large players in the US, and add some media companies to that, will have a dominant position, maybe with participation, but not control, in my view, from some of the European players. But that's a story that will map out over the next 4 years, not over the next 4 months, in my mind.
Before we move on shortly, first half we've covered these topics. We're going to cover the financing in the second half. But before we do move on, I have 2 more questions. David, they say that, or there's an estimate that the size of the U.S. betting market, legal betting market, in 5 years should be around $5 billion. Somewhere between 5 and 7.5 billion, I think, is what's been predicted. What do you think the timeline might be for the rollout of sports betting in the States? I mean, Simon's saying it's going to take a lot longer than we thought.
And I agree with Simon that there's going to be, gambling has never been, it's always been a political hot potato in the States, never a first priority of legislators, and something that there's a reluctance to move on. Although, having said that, I mean, the growth in the casino industry from the kind of 70s to the present has been unbelievable. From the 70s, where there was Nevada, and I guess only Nevada probably in the 70s, then New Jersey next, and now there's a majority of states that have legalized casino gaming. But that's been a long process to get there. I would say kind of 4 years is a conservative estimate of the amount of time, possibly 4 to 10 years, possibly.
To get the first few states up?
Oh, no, the first few states.
First
few states I would think is reasonable within by a 4 year, but to get a majority of states, I think it would be probably more like a 10-year proposition.
Yeah, I think that's reasonable. I think you could have in 5 years you could have 10 states.
Do you think there'll be any market at all for offshore bookmakers that are not state licensed?
That are not state licensed?
I mean, the current offshore market, Curacao licensed casinos, for instance.
No.
You think there'll be no market there?
In other words, people
continue to bet with them?
Oh yeah, because they may get better odds, or because they're not paying taxes. People don't want to be tracked. you know, money laundering or whatever, for whatever reason, even just not wanting their spouse to know what they're doing.
Right.
So that market will continue. Look, a lot more people will play when it's legal, and when it's out in the open.
And when it's advertised.
Yeah, and when it's advertised, and when their friends are doing it openly. So I think that the potential is actually larger than the numbers we just talked about over here. Remember, U.S. gambling is about an $80 billion GGR market right now. About half commercial casinos and half tribal casinos. So adding $5 billion to it is not a big number.
Right. Right.
And because remember, there's a lot of infrastructure that has to go with that, and corporate time and talent, business development expense. So if all you're going to make is $5 billion in revenues, and if you're going to end up with because of taxes and all the tear charge, the friction charges,
And
you end up with a 20%
rights holders
margin.
as well, which
Yeah.
is going to be a new element.
Yeah, with a 20% margin, it's not a lot of money.
Okay, and finally, before we move on to the financing questions, where does fantasy sports, the darling of 4 years ago, where do fantasy sports fit in a U.S. that has no PASPA?
Well, there's Jeffrey Haas, who's the kind of head of EMEA for that. He
Yeah.
might be the best person to.
Would you
address
like to
that question.
participate? I know you came here as an audience, but
Listen, fantasy sports companies, there are 3 significant players in the U.S., 2 dominant players, with the largest market share being held by my employer. We have about 10 million customers, 2.5 million active, did almost $2 billion of entry fees last year. That's not going away. Certainly some of that spend will shift over into sports betting. We don't know how that will impact customer behaviors, whether sports betting will be incremental as far as their discretionary entertainment spend or not. But the landscape is going to shift. We're going to remain relevant. Our products will evolve naturally in different states in different ways. But we've been quite vocal about our intent to fully embrace this opportunity as it arises.
okay. And Simon mentioned that there's some partnerships being bandied around and talked about. Do you think that the database and the client base that you have are a natural, I imagine they are a natural client base for sports betting?
Yeah, I think there's 3 significant assets that both FanDuel and DraftKings have in the U.S. market. Number 1 is brand.
Mhm.
And we've spent $500 million over the last 6 years building the DraftKings brand in America. It's a mainstream, popular consciousness type of brand. The second thing is our database, which certainly is quite significant. And the third one is our technology. I mean, today we're regulated in 20 U.S. states. We have a full compliance layer in place, geolocation, etc. This effectively gets ahead of the curve on meeting regulatory requirements on offering sports betting.
Mm-hmm. And you probably can't say, but are you planning on being a full-service sports betting provider to casinos or whoever may have the right to take bets?
We are embracing all opportunities to grow our business.
Good. Excellent.
Can
Are
I
there
just
any?
make a
Yeah,
comment on
please.
that? Because we're going to be, in case anyone's interested in looking at casino comps and seeing how casino companies compare in terms of their metrics, multiples and whatnot. If you go to our website, Spectrum Gaming Capital, for free, anyone can get. We track about 100 companies, so you can always see if you ever need to. In Europe, America, Asia, they're all there. And we're going to add something on sports too that's going to be tracking all this so that you can have it in one step. I'm just looking at the draft of what's going up there, and the interesting thing is that of the 6 states that have the legislation that goes along, that automatic when PASPA happens,
Mhm.
all of them have already passed DFS legislation. And if you look at the states that have a proposed bill, which looks like it's about a dozen of them, all but 2 have DFS. So I think DFS is a good barometer for looking at legalization of sports betting.
Yeah, and when you look at Pennsylvania, the Pennsylvania Gaming Control Board yesterday announced 5 new licensees, which means there's 10 DFS operators who are licensed there and compliant with the regulations. This is before online casino, online poker, and online sports betting eventually come out. Those companies are well ahead of the new entrants in respect to, working with the regulators, being compliant, and building their databases.
That's a very good point, and a very good segue into the financing of iGaming business and looking at our options. So we're talking about having some large existing operators, the DFS operators, DraftKings, FanDuel, being major operators in the States. Is there going to be an opportunity for new businesses? I think we mentioned there's going to be opportunities happening in the UK, for instance, because of FOBTs being limited, whereby we might see new products that come out to try to replace that revenue. But does this sports betting legislation in the US offer an opportunity for some new some new businesses to enter the space, or is it going to be dominated by larger European operators? I mean, William Hill already has a massive presence in the States, as do many others. Or are we going to see someone come out in the U.S. with some Silicon Valley money that's going to come in and change the landscape completely?
I think the most interesting ones are DraftKings and FanDuel, because they've invested so much in branding and customer development, so they're a natural player to join with established licensees, or even to go off on their own and become a licensee. It's a little harder because you got to do it state by state. As far as the, I haven't heard any about new technology companies that are going to be jumping into this. I've heard that most people seem to want to align with European operators for technology, B2B players. I've heard from some people that SB Tech seems to be doing the best job of convincing folks in the U.S. that they've got a very compelling technology and a better interface, that it's easier to work with. Kambi has done a similar job, and I've heard from a couple of people, if you add up their commentary, it looks like SB Tech is number one and Kambi is number two, and obviously Games with OpenBet is very well positioned. It's not always that if you have the best technology, you have to have the best sales force, you have to have the relationship, people have to trust you, think you're going to service.
Yep.
Even Amelco, which is a very good fundamental base for this business, because I understand that it's the most, not the most user-friendly, it's the least user-friendly, but the most adaptable and stable platforms. So all of them have good opportunities, and those are not names that are known in the United States now. So I think you're going to have a little bit of mixing and matching. There's going to be a lot of fooling around in terms of a lot of dancing between parties.
But you think it's going to be the existing operators? You don't think there's opportunity for new entrants?
I think it's going to be more likely the existing operators, and certainly the licenses are going to go to the. It's going to be favored for the casinos, and secondly for the tracks.
Simon, do you concur, or do you think there's an opportunity? I mean, you're a startup guy.
Yeah, I concur, because I think it'll be prohibitively expensive. So our experience in New Jersey, where we've got a significant share of the activity there with Slingo, we purely licensed that out to third parties. All of the casinos except for Tropicana have signed up Slingo. That's given us an interesting and strong business in New Jersey, but only in partnership, and we only take a small cut of the overall pie. The opportunity for us to license our platform in New Jersey is there. We talked to resorts about taking one of their skins, but we did the investment case, and it just looked like it would be so expensive to deliver a consumer-facing proposition using Slingo as a sort of leading brand, which is well known within New Jersey because that's where Slingo was invented.
Right.
We feel that we'd like to participate in any which way we can, but in any sort of American opportunities, mainly we're looking towards the iLottery space, but we prefer to do that in partnership.
So you don't think there's a common myth that goes around, obviously in the UK, that New Jersey's not working as well as it could be because of mismanagement or lack of management or lack of staff and resource put into the product. It would seem that if you did the business case and you did not conclude that you should get involved, that might not be the case. Are you finding that?
So our experience of New Jersey in the way that we've entered, which is a licensing approach, so building games and licensing them to the different operators over there, has been quite fruitful for us. Again, very expensive to get set up. You've got to go through all of the stuff that you were talking to earlier in terms of regulatory approval, compliance. I had to sit down for 4 or 5 hours with the DGE, fly them over here to meet my entire team and sit down and go through your bank statements for forever and a day.
Right.
It's super invasive. It's super expensive activity to conduct. But for us, it's fruitful. But I wouldn't say trying to establish a consumer-facing brand in the US would be at all within our grasp, unless you had significant backing. So maybe there's a value-based Scion or something who's got billions of dollars behind them. Maybe they could go for it, but I think you'd need significant financial resources.
Adam, we've not heard from you yet.
Andy, yeah.
Andy?
Yeah.
Well, then I
Sound
introduced
about
you entirely wrong before. No, you're absolutely right. No, I know that's Adam. I thought you were Adam too. Okay, Andy, let's
Yeah.
go with that then. Let's keep with Andy then. We'll stick to that. Andy, let's talk about the crypto and blockchain-based businesses. There's probably, I'm going to guess, there's going to be around 60 startups in gaming in that space at least this year. I probably get 2 press releases per week regarding a startup in that space. Are we going to see innovation coming from the crypto blockchain space that's going to be compliant, working with the new legislation in the U.S., well, potentially new legislation in the U.S. for sports betting or gaming, or is this going to be a non-U.S. opportunity for people that are going to get licensing Europe and other places where you could get localized license?
Yeah, I mean, we've seen a huge number of companies in this space as startups generally coming to us looking to do ICOs, expressing an interest as a form of fundraising. Cash Bet was the largest one that we've seen. They raised around $50 million, which for an ICO is generally a decent sized raise, but also in terms of this industry is a drop in the ocean in terms of what may be required. I think that there's inherent risks of trying to blend cryptocurrency and blockchain and the lack of regulation, with existing models. There are some interesting use cases for blockchain here, and a lot of what they're trying to do is pushing around the transparency, the openness, the security around blockchain, and the ability to pool liquidity across it. There's a relative proxy to what we're trying to do, which is essentially a white label system for a crypto exchange. The same thing applies also to blockchain, but the underlying technology allows that to be achieved extremely easily, and with kind of local representation, taking that, then it becomes a relatively sustainable model. Most of the roadmaps of the companies we've seen over the past year and currently going through ICOs, we're looking at least a year before they're even going to try and make any form of impact through marketing or anything else to actually become mainstream. And it'll be interesting to see what happens in the next year, whether any of these gain traction. Obviously, the cost savings they can generate potentially using blockchain are huge, and in terms of improving margins, I think, to be honest, a lot of these companies are looking to have set something up, develop it, invest this $50 million, come up with the core technology, and potentially then be bought by the larger players to enable them to access some of this technology and advantages.
What would you say about Funfair? So they're more casino orientated, obviously, but ran a pretty successful ICO. But what would you make of someone like that's progress? Post ICO.
It's something that a BlockX we would probably away from to us, unless the core of the business involves blockchain in some way. There's a reason to do it. I mean, an ICO in itself is an extremely efficient way of raising money if it's done right. Not only are you going to be raising funds, you're generating a community, you're generating users that will then be the people who ensure that your platform will at least gains initial success, and potentially then through word of mouth, everyone else can help build momentum. I think it's slightly more difficult from that side to say, well, this wasn't just a general fundraising exercise, and it became very frothy last year, the ICO world. It's changed a lot this year. We've seen people who would have done 50, 75, 100 million last year looking to now go to 10, 15, 20. Generally, people in this space, obviously now crypto prices have come down. They're slightly more educated than they were. The days of the overnight 1,000-time return have disappeared, and the community now is expecting more in terms of communications and working with the companies to help build it. So I think, it's complicated to add that extra layer of reporting and compliance when you're managing a community on top of trying to run your business.
And how significant do you think it was for the cashback guys to get the Arsenal endorsement?
Yeah, I'd be interested to see exactly where that came from. Yeah, no, absolutely. I think to get that back, it's a trend we've seen is now big name ICOs. We're seeing the likes of Atari. We're seeing the likes of generally bigger players. If you can get a name behind you, then generally you can get more interest, and it's seen as going to be a larger return. Yeah, I mean the Arsenal thing obviously was a huge coup for them. I'm assuming they must have
greased their palm with.
Yes, absolutely. This is
coin.
the thing about when you're creating a coin yourself. I mean, obviously, then in terms of how you use it, is largely determined by you as well. If it becomes a win-win, if you can then generate the Arsenal fan base and raise the profile to ensure there is more secondary market activity, you can afford to obviously attract more people to sponsor you in the first place.
Andy, just to make sure everyone knows what we're talking about when we say ICO, can you just very briefly describe ICO as a fundraising option for startups in the crypto community?
Yeah, absolutely. So BlockX, I guess, our level of involvement. BlockX itself is a digital asset exchange platform, and our ICO involvement kind of comes in two places. One, we did our own ICO, so we raised 23 million euros, finishing in March, so for over a period of about 3 months. On the other side of that, we have a platform where we allow third parties to come and issue their ICO, and we will aid with book rights. Essentially, it's an end-to-end service, and if we think there's a decent business, a decent idea, and a decent team, we can help cultivate that idea. I mean, an ICO in itself, I guess you could split two ways.
Well, what is an ICO? Can you describe what exactly it is?
Yeah.
If someone doesn't really understand.
I mean, essentially, you're
Or perhaps
creating.
no one really understands.
I think that's good.
And it's not, it's
Even
not,
the people doing the ICOs.
Yeah. It's not
Literally
gonna help.
just you and Adam understand, actually.
It's not going to help when you say you're issuing a cryptographic token, obviously. But essentially, you're creating a token which, depending on how you're structuring this thing, essentially is a voucher. You're future selling the services of your platform. This is what we would call a utility token or an app token. So essentially, you offer discounted services now, so you get the money in order to help fund your business and build it to a stage where I'll stay away from the word investors. The participants of the ICO can then realise the initial investment they made, or potentially traded within a secondary market for a gain in the secondary market. This very much is separate to security tokens, which are exactly the same technology, but these essentially are some way tied to the value of the business. They pay a dividend, they're linked to cash flow, they're linked to the value of the business, and people buying these things, essentially their monetization comes through the growth of the business. Now those are securities, they are regulated. Obviously ICOs, initial coin offerings, generally a grey area. Our perspective on these is, look, we will only touch these app tokens, utility tokens. We won't touch anything that looks like a security. We need a legal opinion around these as well before we allow anything.
But security tokens are another funding option that's now becoming legal and regulated by various jurisdictions.
Absolutely, and this is, for us essentially the kind of holy grail of where we want to be, which is, taking. I mean, a security token offering in itself is essentially a decentralized IPO. It's almost different. And getting to that stage where, I mean, we embrace regulation in the space. We're looking for it. We currently treat everything we do as if it was regulated, which is why, given the lack of it, we can't touch these security tokens, these securities. As these things change, we're looking to position ourselves there. But absolutely, I think a lot of what we're doing in terms of fractionalization of bonds, we're in the FCA sandbox to get to a stage where we can issue bonds and then fractionalize them into smaller chunks, and a lot of these are efficiencies and cost savings in terms of getting to market for these different things.
So, you mentioned that the ICO market is soft this year as opposed to last year. Is the STO market, or the security token market, going to be the next thing that brings investment into the crypto world?
Yeah.
Or is it going to not be as impactful as the ICO was 2 years ago?
I think, I wouldn't say it's soft. Certainly the raise this year is bigger than or on track to be bigger than last year. I think it's a far more competitive space. People are expecting higher standards in terms of what they're doing. There's less of the kind of stick 100 quid there and 100 quid there and hope one of them goes up in value by 10 times or more. I think absolutely, as we, in the US and us personally, we're currently setting up partnerships to get involved in the security token side of things. I think at that point this starts to become more mainstream and seems to be. When we started looking at ICOs, we kind of sat down and said, look, all these ICOs, all this money being raised, if you cut it out and look at it, we sent an analyst away, and he came back and said, look, as far as we make out, about 20% of these things are outright scams. Yeah, about 20% of them are that bad, the people organising them are scamming you, they don't even realise it themselves. But there's this cream of kind of 2-3% of the top of genuinely good use cases. And it's finding those and bringing those mainstream and setting up the regulation behind it. And security tokens are a huge part of that. And getting to that stage where these things can be seen on a par with other fundraising methods. Yeah, that's absolutely what we want to see. We will see traction. We won't see much definitive regulation to an extent allowed global, and certainly in the US it's particularly difficult with the SEC. But I think this will be a huge year for the development of it.
So Simon, that's how the next generation is going to fund. If you're a startup and you're not digital and you're not crypto, which don't exist, but if you were, it seems like everything's crypto and digital now, or crypto and blockchain. But if you were a startup in this space, what kind of financing options are available for you?
So me and my partners tried to fix this problem when we were at bwin. We got acquired by Party Gaming bwin, and we set up an incubator, effectively, or a fund. We put money in ourselves as partners, and bwin and Party put in money alongside us. We had a 15 million anchor investment, and then we went out to try and find cool, young, gaming-specific startups. And the idea was that we'd then raise a bunch more money to go along with the anchor investment. We couldn't raise money for that sort of initiative and that idea. bwin and Party lost interest as they had their own well-publicized issues and problems around the core business. And so we ended up having to close that fund down, seek alternative funding through a reverse IPO into a company called PDX, which is a failed Cambridge technology business. And the reason we did a reverse IPO was because we needed cash to keep our investments going. So that was how we were sort of wriggling around trying to get to keeping what seemed like very promising startups going. And that is what Gaming Realms is today. So it's a very convoluted path for me in terms of the fundraising for the second business. And you'd have thought after exiting Foxy for in excess of 150 million bucks, I would have found it really easy to raise my next chunk of change to go and pursue some ideas and some opportunities. But that wasn't the case. And I think Mark Blanford's another good guy who has trodden a similar sort of path in this sector. He's had very many successful exits and investments that he's made. His view was that why not get third parties to come in alongside me? And I think he's had similar challenges in terms of getting people interested in the sector and the space. And I think a lot of it is around, it is kind of a sin or considered a sin stock type scenario or an area. And a lot of people who you might traditionally go to, even us when we go to institutions in terms of the listed vehicle here in London, a lot of people are just not allowed to invest in gaming related ideas, etc. And so I think it means that there's a very narrow opportunity for young startups. And I think the majority of the options are going to people like Velo, Martin Michel, sort of these sorts of guys who've made a lot of money out of the sector and understand the sector. And guys like Mark and guys like myself or you, in terms of that initial seed capital.
So you think angel investors maybe angel networks even?
Well, I think, and you see in Stockholm, I think there's a much more higher prevalence of it as well, where you've seen the likes of Evolution and all the other great stories that are coming out of that marketplace, Bets on, Unibet, etc. Because people have seen it, made some money out of it, I think there's more acceptance in certain jurisdictions and markets. But I do think it's a tough nut to crack in terms of getting people to invest. And the interesting thing to me has always been about gaming, once you get a bit of traction, you kind of don't need any third-party capital. So if you can execute and create something of interest and that can generate customers and users, at some point, relatively early on in the phase, you don't actually need third-party capital. You're profitable.
Now, you mentioned incubators. There actually are 3 or 4 in the space. I know Kindred's got its own incubator. Do you guys have an internal incubator at all?
Nothing we've been public about.
Okay. I love it. All possibilities at all times, always. But there are some internal, obviously, incubators.
William Hill had one. I don't know.
William
whether-
Hill had one,
Not
yeah.
sure. It was in Shoreditch.
I don't know
sure.
if it's still going or not.
Yeah, I mean,
with
this is
William
the
Hill's.
issue. I think, it sounds like a great idea, but actually,
Yeah.
for a big corporate to execute on those sorts of things, it's difficult. I think they like Crispin so much they don't give him a very senior role in the main business.
Right.
So even if you do find some talented people and some people who are good at executing in the sector and in that environment, often they'll be needed to help with the innovation internally.
Yeah.
And so it sort of gets subsumed into the whole.
That's true. You've got angels, but you do have some VCs. I mean, you could call Velo a VC, I suppose, and you would call Burleywood a VC, and there's some down in Malta, and there's some in Stock. So there's very limited venture capital businesses, generally funded by very successful people in the gaming space
I
initially.
mean, I guess that's my point. I think typically the understanding point, we go to meetings with guys in the city, and some of them are surprised that people are actually gambling online. And when you've got to overcome that level of lack of understanding of the sector, you're going to have a tough job convincing them that really what they need to do is give you some, join you as an institutional backup.
Yeah, actually, I think there were, I believe, 3 gaming projects, iGaming projects on Dragon's Den that were funded. So you see, just go to television and they'll give you the money. A few of the ideas were.
But did any of them work?
No, no.
Because there was gaming alerts from
Gaming alerts. Yep, that was
from those
funded
guys.
by the
Theo
guy.
put in loads.
That's right.
I think it was the biggest investment they ever had.
Yeah.
At that point.
And that was an interesting one. Did not work out at all.
Well, so that he just gave them back the shares. So he was quite
Yeah.
he was quite a nice guy over the whole scenario.
Yeah.
And they created their gaming agency off the back of it. But
You-
yeah, the alerts idea that they had this idea that basically you need to be alerted when there's a great poker game going on or when there's a great bingo
the
room
odds
that's-
are what you want on your
yeah,
team.
yeah. So it wasn't like a terrible idea, but the idea was you went to the website, set up an alert, and then it pinged you on your phone or whatever.
It came up on your desktop, so it was integrated into Microsoft, and then they changed Microsoft, and no one wanted alerts anymore, and you get sick of the paperclip. And the idea came out right as everyone decided they do not want alerts. So
And probably just before they all got a mobile.
Yeah, I mean,
Yeah.
my experience with Betfuse was that the early stage angel investment, through using EIS or SEIS, wasn't a problem. It's getting the growth stage investment to come in when you're looking to do a Series A, you're looking to raise like 3 to 5, and that's the really tricky level because the VCs won't touch it, and unless you find a route to more welcoming cash, then it's very difficult to raise that level.
Simon, I mean, you're obviously involved in some of the bigger transactions, as David is too. But what do you think about this middle level space, the 3 to 5 million space, or the even 1 to 5 million space? Whose sweet spot is that in?
I can't really comment on that area because our focus is much larger,
Right.
And I think it's reflective to what Simon's saying is you that early stage is difficult to get more established interest from, whether it's a big 4 firm, some of the law firms. There's a lot of participants that will only engage once something is proven to a degree in the gaming space, and that bar has come down a lot from kind of 2004, but it's
So
still.
a friend of mine sent his business plan. I'm a sort of advisor to him. I won't name the names or anything. Yesterday, an advisor in Stockholm who I identified for him, and he came back and goes, "Your raise is just way too small. I'm not going to get involved in this unless my fees are equal to 100,000, because it's not worth my while."
Yeah.
And so these are some of the issues you come up against. I reckon that guy could have easily raised him the money and could have potentially participated in later rounds, but he's not got that vision to come back and say, "Hey, give me some equity, and I'll do it for sweat equity or whatever."
Yeah.
There's no, and I think probably because he's done that in the past and it hasn't worked out for him, or I'm not bemoaning his lack of interest, but it's very difficult at those smaller numbers.
It takes just as much work to raise 100 as it does to raise 10 for
That's
the
what you keep
broker, so
doing.
you might as well go and raise hundreds. Adam.
Yeah, that's what I was going to say. When we starting out, it was very, very difficult to raise the first 100,000, and we just jumped right into the tens. And the kind of conversations you have are a lot easier. On the back of our ICO, we actually raised 5 million in equity. It took 1 month,
Really?
and the deal was done. So,
Okay.
you know,
Okay.
people
What was
look
that?
at-
And yeah,
It's a hedge
what
fund.
was that? Yeah, it was a hedge fund.
Hedge funds.
You had to
So
find the right
when
individual.
You look at crypto and you look at gaming, and my experience in both, raising money for both industries, is they're very similar. It's the same comment. Can't invest in you guys because it doesn't fit within our mandates. You know, all I hear about Bitcoin is that you guys launder money and, you know, buy stuff online. So getting past that with a lot of people that don't understand the space is extremely difficult.
Right.
Which is why things like an ICO, where you go to the users, potential users of your product, seems to be a lot easier because they understand your product because they're a user of the product. You don't have to have that conversation about, you know, it's a sinful stock. So if you're able to directly go to your customer base or your potential customer base, and you're raising, you know, a small amount from a lot of people, it tends to be a little bit easier.
Right.
And I wonder if, you know, when you see these crypto companies raising 20 million, 50 million, 2.2 billion if you're Telegram, if that starts to have a mental effect on other people trying to do an equity raise for 3 to 5 million. You know, when you see company A raise 20 million and company B raise 3 million, well, company A is much better because it raised a lot more money, even though they're probably not.
Yeah.
And that was kind of a mentality thing that we had. Do we want to raise? We only need 3 million, but we can't do an ICO for 3 million because no one will take us serious.
Right.
So now we need to raise 30 million, and we don't need that much money, but you have to because people aren't going to take you serious. We're trying to raise a smaller amount of money. And it's really bizarre to think 3 to 5 million is not that much money, considering how hard you had to scrape for that 100,000 just a year or two before.
The ICO market's funny that way. Oftentimes you read the white paper for an ICO, and the paper will say something like, we're raising between 3 and 30 million. And you have to think, fire your CFO. You're not sure. It's somewhere in the range of this 27 million. It could be off by 27 million either way, but it shouldn't really matter.
Yeah. I think one of the points Adam just made is about going to your prospective customers to do your raise. And I don't know if you're familiar with a company called Premier Punt. They were a DFS company in the UK, are now going into sports betting here, and they've been using a crowdfunding platform called Cedars.
Yep.
And to raise 300,000, and this is their second crowdfunding round on Cedars, which is sold out. And it's similar to what the fintech companies are doing. Revolut did a raise 2 years ago for, I think it was 1.2 million sterling, and now they have £1 billion valuation. Yesterday, Free Trade did a fundraise on Crowdcube as well, sold out, you know, in an hour and a half. And what they're doing is they're going out there to try to get their prospective customers to take an equity position and grow with them.
Yeah, I'm loving that you brought that up. I didn't want to bring up crowdfunding, but you're right. It's a great way to acquire customers. If you're a sports book and you're launching a crowdfunding site, everyone that's funded you is going to bet with you. There's no two ways about it. Whereas you ICO, they might they want to get rid of their coins as soon as they can. In STO, you might want to sell out. But if you're crowdfunding something, then generally you're going to be involved in it, and it's just a super way to get this new customer base in. So there's a double benefit. You don't just get the money, you get the players.
I think you do need a business though that has some legs. So I loved Brewdog where they were doing the bonds and they were only paying interest.
Yeah.
And the interest that you were getting was like, I think 10% or something. And I used to look at that and think it's the most, because obviously they succeeded, so it wasn't a problem. But for everyone that succeeds, there'll be people issuing those sorts of bonds out to their consumers who may hit a snag or two along the way.
There was a really
But even if they hit it out of the park like Brewdog does, you don't get any of the upside, so you just
Right.
get your loan back.
Yeah.
So
there was a crypto company on Cedars a couple of weeks ago that tried and couldn't raise, which is so weird to be in that space and trying through a traditional crowdfund instead of an ICO.
makes no sense. And it probably points straight to the fact that they're not super clued up, like you were saying, probably scamming themselves.
I don't know. I don't know. I don't know if you can draw that conclusion. I like the crowdfunding and I like blockchain technology, and I don't necessarily know if everything should be an ICO. So I think horses for course in a lot of ways. You had a comment, sir?
Yeah, there's obviously the gambling sector as a whole has a fairly limited liquidity from traditional banks, just given the sort of regulatory appetite that a lot of traditional banks have. The presence of an ICO, an STO, or any other form of sort of low level of education of the investor and very granular holds across investors. Do you think the presence of that in businesses as they grow will make banks more averse to them? Is there just a view from these businesses that they'll never go to traditional lenders? And do you think this, it sort of limits their options further down the track when they're trying to raise, 200, 300, 400 million?
I mean, there's a company I know that makes 2 or 3 million a year profit, clear, They do touch a few sort of maybe questionable markets, but not, 89-90% of their business is UK, and they've got a little bit of activity in markets like Russia, and they can't get a bank account here in the UK,
Yeah.
like with anyone.
Yeah,
So,
absolutely.
and they even tried things like Tide, which is like an app-based solution, purely because they need to make some payments in the country here, and they, I asked Barclays, I introduced them to Barclays who do our banking, and they said, oh, we can't because they, the regulatory, the jurisdictions they touch, it's just on our strike list, so can't do it.
Yeah, absolutely, and I think that's exactly the point in the sense that there's so many grey markets that still exist, which banks probably can get comfortable with. I think if you compare an ICO to traditional retail bond in the sense that you have a very small holding across a large number of customers typically, and the potential rep risk that comes with that if business starts to sour and potentially default off the back of it. The ICO and STO might be similar in that respect, and that alongside the regulatory grey markets that gaming typically touches, do you think it further limits the traditional bank liquidity?
Well, we should probably separate ICO and STO because a securitized token offering is a bond, it's an equity issuance. It just uses different technology.
Yeah.
So that's a branding issue. The regulators have been quite clear.
Mhm.
Most ICOs are actually securities, and so now people that arrange these things are starting to call them securitized token offering in order to try and arbitrage the hype around an ICO and sort of crowdfunded ICO, but also say, look, we're a regulated product and doing things the right way. The reality is, it's a bond, it's an equity offering, it's no different other than the technology that's behind it. And we don't hold bonds nowadays. You don't have an Apple stock. It's already fractionalized and digitalized. It's sitting in an account somewhere that you never see. So the reality is very little changes on an STO. It's just there's more hype and marketing about it, which is why you have NASDAQ launching an exchange. You have Toronto Stock Exchange just launching an exchange. You have traditional players getting into the space. We have traditional investors looking to use the regulated bits of the business. So I think 2 years, 3 years from now, if you've run an STO, you probably won't call it an STO, and it won't affect your ability to raise more money. Now, if you've ran an ICO in the United States, you will not raise more money because you've probably broken a whole bunch of securities laws, and you won't get touched. So as long as you do it the right way, follow the laws of whatever your country is, you should be all right. Maybe if you layer gambling and ICO together, that might be a bit too much. But as long as you follow the financial regulatory laws in the country where you're taking the money from, then from what we've seen from the bigger firms, the hedge funds, the growth equity firms that are coming asking if we need more money, it hasn't really affected our credibility. But that's because we follow the rules.
Yeah.
So I'm involved in a few startups. One is an ICO, one's an angel with a U.S. billionaire investor, anchor investor. One's a UK billionaire anchor investor, and the other's industry angels. So the early market, I guess you could find some money to get your first seed capital. Like we said, the middle is very difficult. When you want to raise a lot of money, though, Simon, what do you do? What are your options when you need to go for the major rounds of financing? Or maybe you want to acquire something, or I see an opportunity in the U.S. and I'm a gaming realms and I want to buy Churchill Downs. What are my options at that point?
As demonstrated in the last month or so, the U.S. market, if you to the point made earlier, if you are a regulated gaming business, even with elements of unregulated or grey markets, as long as they're not definitively illegal markets, and obviously there's some important definition around that, the US capital markets offers huge amounts of liquidity and much, much more leverage than you can get in the European markets. And those markets are open for gaming businesses, and there are few, but I think we will see potentially more with, over the next 4 to 5 years, the growth of the online gaming business and the integration of the online gaming business with traditional gaming business. the US.
So you think there'll be an appetite in the U.S. public markets?
Yeah.
Is that how Stars pulled off their transaction with Skybet?
So, I mean, their funding is US-based equity and debt funding, and it's still in progress. So, but that's where it will come from.
And go ahead, David.
No, I was gonna say,
There's
Rob is
plenty of
gonna-
interest in these businesses in the U.S. If they're large and established, like Stars and things like that. Once you have a certain level of scale, you can get debt, and you can get a lot of debt too. It's when we were talking before about these $3 and $5 million raises for companies that are barely profitable, or they've had a few months of profitability, or they're not yet profitable at all. Those are impossible, because when you go to the venture capital guys, they typically don't want to get into anything that requires licensing. So because we actually tried to raise money twice, for a DFS company, this is the early stages of DFS, and once for a game manufacturer who had some cutting edge games here in Europe. And both times we went very, very broadly. We spoke to an awful lot of people, and we just got shot down. We just said, that's it. We're not going to waste our time anymore. We canvassed VC funds. Again, anything that requires regulations. In the DFS case, they just didn't have enough confidence that the business was going to take off. Their presumption, which turned out to be right, is that DraftKings and FanDuel raise so much money that they have the staying power to make it work, hopefully make it work, whereas these guys just, nope, they weren't sold on the viability of the business model, and
Right.
The other cases were not willing to get licensed. Now, once you get into larger companies, especially public companies that are already established, then everybody wants to play, and the rates are compelling, and you can get 5 and 6 times leverage. You can get a lot of leverage. Rates are really low, so you can put on a lot of debt, and the equity is there too. I mean, you've got so many funds now, hedge funds, private equity funds, that have gotten licensed. I think there's about I keep a list. There's probably about 25 or 30 that we know that have been licensed or close to being licensed, and therefore they'll take on involvement in these spaces. And some of them can write billion-dollar checks or $500 million checks, or club together a deal for that sort of thing. It's the smaller things that are harder to do. We know just from the gaming finance side, it's much easier to raise 300 or 400 million than it is to raise 50 in debt. I mean,
So
we exist for deals that are smaller, for
Right.
under 150.
But let's talk about the capital markets again, the equity markets. There's a disparity in the earnings per share willing to be paid by different markets. You see a lot of hunger in the Canadian markets. You see the Stockholm Nasdaq is a very popular market for gaming companies, and offering a better multiple for gaming companies than, for instance, the UK market. Just going around the globe, I guess, to Simon and Rob, where is a place that is most hungry for our sector?
Well, it depends where your business is too. I mean, it's very hard to take a business that's operating in the United States and float it on the Stockholm Exchange. You can't. It's you don't really have the ability to choose. The exchange has to relate generally to where you're doing business. So it's not who's got the best multiples. I remember years ago with gaming equipment manufacturers, the multiples for Aristocrat and some of the other companies that existed at those days were much higher in Australia. And we talked about this. Maybe we can go to Australia, but if you don't have much of a business there, you're not headquartered there, it's hard for the investors to get comfortable with making those investments. People want to often invest in what they know, and they know their home companies. So I haven't seen a lot of market shopping, if you will, capital market shopping. You kind of limit now in a very, very large deal. you're going to go to the largest markets. So I don't know if that answers your question.
Yeah,
It does.
I
Simon
do.
concur?
Yeah, I agree. I think, and the other thing, when people make comments around how huge some of the UK operators' presence in North America is, that needs to be put into context of the scale and cash generation of some of the North American gaming businesses and their associated market caps. And many of those North American gaming businesses, albeit traditional gaming businesses, have market caps that are 10 times our largest domestic gaming businesses. So, at the point in time where, I off the top of my head, and the corporate structure, MGM's about 15, Caesar's about 13, GVC, William Hill is single digits. There's some currency movement in there, etc. You've got Stars at 5, and when that goes through the mergers, obviously that will be larger. But there is a shift happening, and there are only a few operators in the digital space that are of the same scale as the traditional operators, and that will play to who drives some of the consolidation in the US market, I would think, and their ability to raise financing to do it.
The interesting question that a lot of people I speak to are wondering about now here is, will we see some of the European companies try to buy into the US market as a way of establishing themselves there and get part of that business? Because it's more the American companies that have been going out, and the Asian companies, as you know. Genting, for example, has large operations now in the U.S., and others are hunting around. Galaxy took a 5% position in Win after they had their crisis. So big question mark, is Galaxy going to try and do bigger? But now with sports betting coming and all the hoopla around it, there's a possibility for the UK companies to try and take a position in U.S. gaming. I met with a European gaming company this morning who's very interested in expanding their U.S. operations. But I asked, do you want to go try and buy a U.S. company? And the answer was no. They just want to do deals here. They're a provider of services, but they're not interested in getting into bigger businesses here in the U.S.
I guess it depends on licensing. You might buy into licensing. I know a lot of tribes have been trying to sell their gaming licenses or partner with people exclusively for certain amounts of money for the gaming licenses. So again, I guess it's going to depend on what each state decides, or who each state decides will be the operator.
Yeah, the tribes are actually a very interesting topic, and it might be an interesting way in. It's just they tend to be difficult to deal with. They have about half the casinos in America. A lot of them are small casinos. A few have ventured outside their states and got into commercial casinos. The Porch Creek tribe just bought a property. There's a couple of tribes in the Midwest from Oklahoma that have gone out. There was a tribe that tried to buy a property in Louisiana just recently, and it failed. They couldn't get the proper licensing. So it's challenging with the licensing with them, and it's challenging with a lot of people are frustrated to try to do deals with the tribes because they've come at the business from an entitlement. They were granted an entitlement, so they're not a typical commercial enterprise. They don't pay taxes. They have advantages that others don't, and they're not used to functioning from a normal commercial environment. Their standards are just different.
Yeah.
We need
David,
to.
I know we need to wrap up. I just want to
maybe
ask
some questions.
if there's any audience question.
Yeah.
It'd be a great time to ask. Anything that you wanted us to cover that we didn't, or any question on anything that we've said? No? In that case, thank you very much, David, for hosting us.
And thank you, Michael, for your
thank you
as
for
a
all of our
moderator.
panel. Thank you, guys. Great. Thanks, guys.